Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday, May the 9th. This will be our chart lesson for today, and I've just been inundated with emails today about how difficult a day it was and how hard a day it was. These days are really, really predictable for the most part, and really what we had was we had a little bit, we started, I'm going to call this what I would say is a range day. We started really with kind of a downtrend, but we broke it real early, and then we had two legs down to a new low, and then we were coming back up later in the, before the market opened. But, all this prices for vol overnight is between 1625 and 1630. That's a 5 point range, and you can clearly see after the fact there's one leg down, a pullback, and then another leg, and there's a couple legs in that second leg. I didn't even measure them to see if they were, measured legs, but I bet it is. There's first leg, and you can see perfect measured move. I mean, that's just two legs down, a little two-legged move, and then we tried to go higher, and really at 8:30, this is where the market opened, right in here, and you can see we just were in a trading range, and it's a tighter range than even the overnight highs and lows. And when we finally broke through, we made about a measured leg down, and we got into a similar range. I talk about that all the time. Um, measure this one down, and you can see that's it. And there's your next one, and that's exactly what you got. You went a little further than you did the first time. You got a little failed break here. And the only reason I didn't mark along is because you had this trend line coming down and you didn't have a retest yet. And you can see we tried to make a retest. We couldn't get any lower out of that range, and we tested it two more times. And what happens when the market tries to do something twice and fails? It usually goes further in the other direction. Then we trend all the way up to this high. It gets through there. And so just like this was your range here, then you're looking for one similar to that. And you see we went a little bit higher, not much. But again, draw your trend line, and then we get the little break here, move up, and now we're kind of trending down again. So every one of these, the trend line, the short-term trend line would have kept you on the right side. Here's this one. We got the break, two legs down to a new low, and then we started going up. We finally got a break here, a little two-legged correction, and then a retest, and then we headed down to the other side again. And we actually broke through this low right here. Came back and look, we tested it twice, couldn't go higher, and then you go lower. And you finally break this trend line. You got your move, your retest, so you're looking for a low. I didn't like going lower here because now you know your low's here and you don't have enough room to get out. The only way you could enter this one, you might have gone short here, but you had to get in with a limit order far enough back in this bar to get out before you get to these lows right here. And that was the only way you could enter that. And if you entered this at least one tick into this bar, you would have gotten a scalp here. I drew these two in green because, again, we're not able to go lower here, so it's really suspect. But they do, we do have another range here, and this is a failed break. That's a first entry. Then we tried it again. That's a second entry. There's not really good setups there. And you can see I kind of had this temporary line that this was actually the highest from yesterday coming through there. I ended up moving this around. Let me just get that out of the way. But we got a double top there, so you might have considered entering there. I didn't like it because of all the overlap by that point, and I was really thinking we were probably going to go on up here at this point. I didn't want to go long there, and somebody wrote me about longs right here, but guess why you don't want to go long there? Look at how many times prices have failed to go higher right there. It's just a little tight range here. So the only thing you consider is short. And if you'd have gone short on either one of those, they would have worked. You would have had to ride it out, but they would have worked. I like this trade because now right here, make sure you can see this. Let me just clear this up a little bit. You can see you got a failed second entry long there that trapped traders. So you could have gone short below that bar because there's a trap, and that was an easy scalp. And guess what? You bounced right off that same low again down there. You got a reversal bar, so it went lower first and then turned up, so go long right there. You got room to get out with a stop. If not, drop a limit order in there if you want to try to get a limit order, but you might have got left behind, but I think it would have got filled. But I like the little trap there, going short first and then breaking back above that bar. So another easy scalp, and this one's still going. You could have ridden your runners all the way up. So you were able to get runners off of this trade. That's the only one on the way down. You could have gotten some runners off this long here, the first one this morning. But let's just start back over here. I think I missed these first couple of trades. I got ahead of myself there. But we were coming down. We broke that trend line. We made two legs down to a new low. We found support right down here. This was a doji that didn't close on its high. So what you might have wanted to do instead of entering with a stop is wait for it to trigger and drop a limit order in and see if you could get filled. Either way, it was an easy scalp back to the top, but you've got two legs down and you've got your trend line rules, and then draw your trend line on the way up. And guess what? You didn't get a break till right here. I still like this short because we went into this trading range, and I really thought we had enough here to have a break. It's not a real good one, and you see we did come back and test it again just to, it's because a lot of people probably weren't sure that we had a break yet. But this is a failed break higher. It would have worked for a scalp. There's a second entry short here, but I didn't like entering there because now you got too many overlapping bars and dojis. You can see that's a little trading range forming in there, and that's why I didn't like it. You might have thought about going long here, but I thought it was really risky, so I didn't mark that one. And I didn't like going short here. Not a really good setup, but when you had the failed second entry long there and that reversal bar, great place to go short. And notice this is really like a breakout pullback short because we did go lower below that double bottom there. And again, try to use a limit order if you're, because it's, you don't quite the same thing. You don't quite have enough room to get out there. But this didn't hesitate. It went straight on through. And you should have had your trend line off those first swings. Then you got a double top here right at the former. Actually, I originally had that there. When we made that high and that low, I brought it down. And you see we tested that twice. Second entry short basically there. It's like a little two-legged pull back to the trend line. Again, you might have thought about using a limit order here. Sometimes you'll miss those trades though, but another easy scalp. I didn't like going long here because of the overlap and the fact that we didn't have a break of a trend line, because you don't know that we're not going to go even lower. And on this one, I was looking for a measured leg like that right there, and we didn't quite have that. And so that was another reason that I wasn't quite sure that this was a good entry yet without having the trend line break. But we did get the trend line break, a second entry short right there. So easy, easy scalp. We got just enough to scalp out like usual, and then it bounced. And again, the reason I didn't like this trade, even though there's a little bit of a trap there, is there's not much room here. So the only way you could enter that was with a limit order. And unless you entered it that way, you don't want to enter with a stop below all those three overlapping bars right there, even though there's a little bit of trap, because there's just not enough room. And, you were looking for, you already had your, if you measured this little range, which you may not have seen that yet because it was a little confusing, but sometimes you will get a trend or a range that starts after the 8:30 open. And I think that's what this was. And then we looked for one the same size to the low side. Then we got and you can see we're just still heading lower here, but look at that trend line, the break, the double top, and now you're heading lower, and that's exactly what you expect. And it's also a failed break above the overnight highs up here, which generally that's a good trade as well. But if you just draw these temporary trend lines, it will help a lot. And I tell people that, but they tend to forget it, or they can't find them, or whatever. And it is easier for me because I've been doing it a long time. So, I can spot them without even putting a line on there almost. So, but there were plenty of entries today. And there were even more that, that met our rules. Like there was a long here. There was a short here if you entered it right. So there were even other trades. There was a long here, basically. And you probably would have even thought about going long up here. There was a short here, and now another short here. So there was other good trades today. So there's plenty of trades out there because I got the comment that there weren't a lot of entries either. But you have to understand what's going on. But this is the advice I try to give people is that I'm trying to remember a couple of things that people asked me about today. Somebody said, there was a good setup bar, but it wasn't a good trade. And they said, well, isn't that what you do? You look for a good setup bar off the highs or the lows of the trading range. That's correct. But you have to have room to scalp out before you get to the lows or the strong support. And you can see there's strong support right across there because we're bounced every time. So you have to have a good setup bar, but not only that, you got to have room to scalp out, or you got to try to find another way to get in, like with a limit order or something. Um, or a second entry or something of that nature. And even here you had a second entry, but you would even had less room. And another thing I've noticed, people will get a setup bar like this right here, but they don't enter till down here. And I understand that's common sense is, hey, let it prove itself out. But what happens is you enter too late. I think it was this trade right here somebody asked me about. And that's a winning trade that I took. But yet they took this trade and it was a loser. But they didn't enter till down here, and then it's too late. You don't have enough room to get out. So where you enter is very key. Just because you see a reversal, the entry is one tick below that doji. Or either a limit order or a tick or two inside that doji. The entry, if you enter down here, there's not room. You missed out most of the move, and so no wonder it failed on you. Sometimes you'll get lucky if it's trending in the market and you enter like that, but you can't enter too late. The timing is everything, and you got to get good at picking the actual lows and highs of these reversals, or you're going to be in serious trouble. Because if you enter too late, you're going to have great trades, great setups that you lose on. Because just like this one right here, you got just enough ticks to get out, and there wasn't one extra tick, so it would have been a loser if you didn't enter properly. Same thing right here. I think it was just enough, if I remember right. If you entered on a stop, you entered at 26, and guess what? It got just enough ticks to get you out, and then it reversed, and it's been going up ever since. So, if you don't enter at the right place, you're going to have a losing trade. So make sure you understand that. It's not, you can't wait for further confirmation. You have to know you have to be able to read this property and know that that's going to be the low or that's going to be the high. And you can't spare one single tick, and especially if the range is this tight. When the range is this tight, you might even want to stay out because it's just too easy to get trapped or not have enough room before it bounces and goes the other direction again. So I hope that makes sense. But I wanted to say something else too. I mentioned some things about Al Brooks yesterday, and then I only got one email, but the way the email sounded and might have come across that I didn't agree with Al Brooks, or maybe that we were that I didn't, what did I really think about Al Brooks, I guess is what the question was. And I just wanted to clarify, I hope that what I said yesterday didn't come across that I had anything against Al Brooks. My personal opinion is based on what I've read of his information. I've read one of his books. I think he is a brilliant price action reader. But my intent yesterday by telling you what I told you was that he has different names, even though we see look at a lot of the same things. Some of the things we do is slightly different, but I think he's a brilliant price action reader. His terminology is often different than mine, and there are a few things he likes to do that I don't do, or that I like to do that maybe he doesn't do, but that's just slight differences in our personalities maybe. So yeah, just want to clarify that I think Al Brooks, if you want to read his information, there's really good stuff in there on price action, and I like his stuff, and I think he's a brilliant price action reader. But if you come asking me questions using his terminology, I probably can't answer them in some cases because I don't know all his terminology, and it is slightly different than my terminology. And again, there's some things he looks for or trades that maybe I don't. I think he's more of a, he loves to trade these micro trend lines, and I mean he's liable to enter anywhere in here on this on the way up, or I'm only going to enter at key entry points and things like that. Um, and that's just something that comes off the top that I think, that comes to thought that's different that he does. I'm not an always in kind of guy. Uh, and I'm more looking for certain areas that I want. If I see the setup at that area, I take it. And then I'm already thinking about where I'm going to exit long in advance, and I'm not going to stay in very long unless I get a strong trend that, that doesn't reach a target or something. Uh, so there are some differences, but no, I think Al Brooks, his information is great. If you want to read any of his books, I think they're great. They're sometimes a little difficult to grasp because I think he's probably an intelligent guy, and sometimes it's hard to relate this stuff in just plain speak, which is what we've tried to do in our manual, to simplify it and say it in layman's terms so even somebody that's not a full-time trader could understand. Somebody that just can read and read English and understand basic English should be able to understand what we teach in our manual, where I don't think you could say that about Al's first book, the one I've read anyway. So you've got to really read through that, and it's a lot to grasp, and he covers a lot of material. And you don't know what's the most important and what's not in that book. But maybe that's where you can watch our videos and figure it out, put it together. So, or buy our manual if you like. You don't hear me say a plug about our manual very often. Everything we teach is on our website or in our videos. It does put it together if you get the manual, but you don't have to have it. You can, if you want to take the time to read our entire site and watch our videos, and you're a pretty intelligent person, eventually you'll pick it up. But I get a lot of emails and questions from people, and they're so far off base trying to pick it up from the videos that they're just completely wrong, and they think they're understanding it, and they don't. So that's not uncommon. So very few people are going to be able to just probably read the website and watch the videos and put it together pretty quickly. You will over time, I'm sure, but you're not going to be able to do that quickly. And, for $100, I'm basically giving this stuff away. And also I will say, somebody sent me an email one time and says, hey, I'm disappointed. I just bought your manual and I didn't learn anything new that I didn't already learn from reading through your website. And well, they go hand in hand. If it wasn't for the sale of the manuals, there's no money to fund the website. So if you feel like you've learned something, even if you don't think you need the manual, buy it from us, because it does help fund the website and the videos and things like that. So again, I don't do this for the money. Really, it's I'm a trader, and that's where I make my living. But I just enjoy doing it, and it helps keep me sharp on my toes because I have to go back and do this every day, review the charts, and so it's my review as well, and it just helps me continue to get better as a trader and myself. So so it's something I'd probably do anyway. And, I just enjoy, the people that I've met through this website, through teaching price action. I've met people, like I've said this many times, I've met people all over the world through trading. And it's really a neat thing. And if I've gotten nothing else out of it, I've gotten that from it. So, but anyway, I'm just on my soapbox today, just kind of yakking here. So hopefully you see, after the fact, obviously it's a whole lot easier to see. And notice I don't have many trend lines in here, and that's because we're in a trading range. There's no real, it's too small a range to really get a trend. When you were working from the higher lines, then you got a chance to see a trend. But once you went into this, you're in a trading range, and there's only one way to enter a trading range is at the highs, you go short, and at the lows, you go long. But what happens is people get short down here and they get long up here, and then they wonder why they had a losing trade. And I did. I got some emails from some people that went long right in here. If you saw this range, you don't want to get long at the high of the range. You can only consider going short here. And you can only consider going long down here. You can't consider going short down here at the lows. Look what happened every time prices came down here. You could have just thrown an order out there and bought blindly and made money. And the same thing here, you could have thrown an order out there blindly and sold every time it came up here and made money, except for this time, and you would have seen the reversal bar, and you could have exited and probably got out with a tick or so. So, and that's another thing. Somebody else asked me about the range and how you know if you're going to be a breakout pullback or if it's going to turn. Well, you don't know. It's a calculated risk. And notice up here, there's only one really good setup. Well, I take it, there's maybe two. There's this bar and this bar. But once you started getting 3 or 4 in a row, I still would have gone short right here if we'd have got a break below that if I were trading. But we didn't. Notice that we didn't get a break. So there's no trigger and no foul done. You might have considered going short here, but again, we aren't back up. I usually use the last closes. That would have been there. And notice that we weren't there yet. And we finally get the setup bar, the only one that I like up here, and it never triggered. And by that time, there's too many overlapping bars anyway, but I still like this because it would have been a trap. But notice that prices couldn't go lower, and instead they went higher. So you don't know that it's going to be a breakout pullback or a failed break. It's a calculated risk. And the more, over time, eventually, notice we turn down 1, 2, 3, 4, 5, 6, 7, 8. Really, you could count that one 9 times, and even here we hesitated 10 times, but eventually it's going to break one way or the other. And so the later into the move, the more odds are that eventually you're going to be wrong and it's going to break out. But notice this bar. Your trigger would have to, you got to get a setup bar. That's the first bar I would have even thought about going short under, and there's no trigger. But really you want to see a better bar than that. And it never triggered, so there's no foul done there. But every one of these other setups that triggered, the trade would have worked. So that's why I'm always telling you, just because you see the setup, you still must have the trigger, and there still needs to be room to scalp out before you get to the next strong support or resistance. And I hope that makes sense to you. And if you use those rules, it's going to help a lot. And it's going to keep you on the right side. And if you drew this trend line, you might have realized that, hey, this is just a pullback to the trend line. Look at that reversal bar. Nothing wrong with going long there because that's a breakout. That's basically a breakout pullback long. So I hope that makes sense to you. And notice that there's not really a good one setting up here. You might have thought about this one, but you've already got a failed break higher, and you got too many overlapping bars there. Notice here that you just had one bar tried to go lower and immediately bounced right off the EMA and went higher. That's probably not a great long really right there, but that's a much better bar than any of these other bars across here. This one maybe, but at this point that's a failed break above this double top, and I don't think I'm thinking still shorts here because you're inside this range, and so you're better off just to skip these trades. And you can't go long at the highs and you can't go short at the lows because that's what traps you on the wrong side. So, going long right here would have been fairly suspect as well, other than this trend line. And notice you didn't really, let's just go back and let me show you. Just say you had drawn a trend line here. Well, you've already had a break, so you get the retest. And then so even at these little micro levels, you can still often find trend lines. You got one right here. You got the break 2 times to try to test it, and then you went lower. Coming back down. You get the break 2 times to try to go higher, then you go lower. I don't know if you can find one. Yeah, there you got the break, then you move to a new low, and then they're all there. And, it takes experience to see these a lot of times. And, and when you start to get this tight, they don't, they're much harder to find, but they're still there. I guarantee you can find them on all of them. So, but anyway, I'm going to wrap it up. It's been a good trading day, another good week, and this was the trade of the day really right here. But I'm going to wrap it up, and we got tomorrow's Friday, and then we'll get a little weekend break. But if you struggle today, you weren't alone, because I got more emails today about people struggling than I have in a long time. So it's just a tight trading range, and there's only one way to trade it, and that's to buy these lows. And it's always the ones in the middle that are more risky. But if you concentrate on the ones at the highs and the lows, and you wait on the trigger and you follow the rules, it's going to be a whole lot easier for you. So, but I'm going to wrap it up. It's Mac with PriceActionTradingSystem.com, and we'll see you next time.